Hi, this is Jim Renshaw. I'm going to discuss hold open title policies with you in this screencast. And so what hold open title policies are is they're typically designed for an investor that is going to purchase a property, fix it up, sell it for a profit, and do that within a 2-year time period. And the benefit is that it saves the investor money on title fees. It could also be used for a short-term owner. So if you as a buyer come in and you know you're only going to live in the property, say a year, you could also use this hold open policy to save you additional money. So here's how a hold open policy works. I'll use the investor example. As an investor, you're coming in to purchase a property and you know you're going to resell this within 2 years. When you come in as the buyer, you pay an additional premium at closing as the buyer. It's usually 10% of the basic rate. Then what the title company does is the title company keeps this file open and they do not issue you a title policy at that time. They keep the file open. Then when you as the buyer become the seller and you sell that property, that's when you receive a discount in the title insurance fees. And at that time, on that sale, the title policy is issued to the final purchaser. So here's how it works from a math standpoint. You come in and purchase a home for $300,000. At that time, you pay an additional 10% of basic rate, or $150 in this example. Buyer then sells, so you as the investor, as the buyer, you sell the property in 9 months for $400,000. And the basic rate on $400,000 would be $1,658. So on the final sale, you only pay the difference in premiums collected between the $300,000 and the $500,000, which is $158. So your total title fees for this would be the $150 you paid as the buyer coming in, and then the $158, which is the difference in premiums, for a total of $308, which is a savings of $521. And this does account for the fact that you would get a reissue rate regardless of doing a hold open or not. Reissue rates are discussed in another screencast, but that's how the math works, and that's why this is a good product for investors. Don't hold me to these numbers. These are just examples. Conditions for a hold open. So when you come in as an investor and you purchase the property, any adverse matters that come up during the time that you hold that need to be satisfied before the policy is issued. An example would be you come in as the buyer. Let's say you do work and a mechanics lien falls out. You do need to satisfy that mechanics lien or any other adverse matters that come up before you sell the property. There also must be a single transaction on the exact same property. An example would be as if you came in as an investor, you bought a duplex, you'd have to sell it out as a duplex. You couldn't split it into 2 individual units and receive the hold open in that situation. It had to be the exact same property type. You also must sign an affidavit acknowledging as the buyer you're aware that you have a given time period to sell this house to receive the discount. Both transactions must be insured through the same title company. This is important as an investor. So when you're going to purchase a home as an investor and you're going to do a hold open policy, you have to also realize that you need to use that same title company when you sell the property. So always good to find a good, reliable, financially stable title company so that they're around in 2 years when you go to sell the property. If you don't sell the property in those 2 years, then title policy is issued to you and you forego that 10% of basic you paid as the buyer. So in our example, it was the $150 would just not be remitted to you. That doesn't make sense, but what I'm saying is you basically lose $150. Okay, those are the potential drawbacks. But as always, contact your title company that you're working with. Make sure you know the terms and conditions. Different underwriters have different rules. So there might be a different time period for the hold open. It might be less than 2 years. It might be greater than 2 years. The 10% might be different. You might have to pay 15% or 5%. So just ask your title company, find out from their underwriter exactly their rules are with a hold open title policy. But it is a great way for investors to save money on title fees when they're doing a fix and flip. Thanks for your time. If you have any additional questions related to title insurance in Colorado or hold open policies, please contact me through the website. Thank you.